AMC stock is about to go absolutely crazy, and I hope you guys have your emotions in check. It's a lot harder to hold a stock that is rallying rather than a stock that you are down on. Some of you guys are down on AMC, some of you guys are substantially up. I don't think it matters what boat you are in. I think we are about to see some massive gains, and that's exactly what I want to talk about and clear the air between a false breakout and an actual breakout, and how we know this is going to be a legitimate breakout. We're going to see huge price increases to the upside, not what we've seen back after the last earnings after August when we did hit about $53 per share. And we're going to go over exactly why I am making these claims as well as everything else you guys need to know. So emotions in check, stay cool. Let's get into this video. Hit that like button for me. Consider subscribing to the channel. As always, check out the links in the descriptions for free stocks as well as the link for the buy and sell alerts. So let's get straight into this video, guys. Just to acknowledge something that you guys are probably already aware about, we had a very substantial green day on Friday. And what I mean by substantial, we only went up 1.14% in regular trading, up a little bit over 0.5% in after hours. That is key. We have not seen a 0.5% move to the upside in after hours in a pretty decent amount of time. At least has to be a couple of weeks. As far back as I can remember, we've seen very nominal, minimal moves in the after hours period. So it looks like the start of next week is going to be bullish. As we do know, about 95% of the time, if we are green on Friday, we are green on Monday as well, and quite a bit higher green on Monday. Now, what you guys really need to know, and some people bag on technical analysis. Now, not everything related to technical analysis actually does matter, specifically with AMC stock. Let me just give you guys the really three things that matter with technical analysis. The first thing, the biggest thing, is the volume. The volume can make or break any technical analysis setup or pattern that you have, specifically with a stock that you have 80% of shareholders just holding onto the shares like AMC. Second thing is resistance and support levels. Third thing is going to be your moving averages. So that's what we're going to focus in this video, and that is how we can confirm that this breakout that we are about to see is not going to be a false breakout. This is actually going to be a legitimate breakout. So first thing that I want to focus on is the volume, and a lot of people are discouraged about the low volume that we are seeing, and this is the number one factor that has me so incredibly bullish. And this is what people just quite frankly don't understand. People are wondering, why are we seeing such low volume? That is actually, like I said, a great thing. Now, why is this a great thing? Take us back to the last false breakout we had from, Q3 earnings August 9th, where we did run up about 1 month later. September 13th was the peak here at about $53 per share. What do you notice about the volume during this time? It's back and forth, but it remains about twice as high as what we see right now on any given day. You'll see big volume days like right here, August 24th, 225 million shares that traded. The next day, a little bit lower. Next day, a little bit lower than that. A little bit lower the day after that, and then we spike back up again. We're not really doing anything too crazy in this period. You're not going up too much, you're not going down too much as far as the volume is concerned. And then we do just flatten out and see relatively unchanged volume in between about 85 and 100 million for volume, and then you see that volume go away and the price just continues to go down. Now, take us back to this two rallies that we have really seen with AMC when we went up 10x both times. What you will notice, the key thing that is the same as right now is the volume levels. That's a shocker, right? I'm sure you guys knew I was going to say that. Volume in between 25 and 40 million for volume, which is actually higher than we did see that we are seeing right now. This was back in January when we were at $1.91, ran all the way up to about $20 per share on incredibly high volume. Take this back, the volume drops again until we get to about June, when we did see those low volume days in between 15 million on the low end and about 50 million on the higher end, and then you go into this volume spike, and that's where you see the major rally. And exactly what is happening right now, this prolonged period of just incredibly low volume. I mean, on Friday we seen 20.6 million shares that have traded hands, and this was the lowest volume that we seen since before the June rally. And that is the main difference between a false breakout and an actual breakout. When you are seeing this low volume and you see volume increase, mind you, at the same time, AMC has been trending to the upside. That is the key thing that is different. AMC is trending to the upside with very low volume, telling you guys people are holding onto their shares, and you're seeing a little bit more buying than selling of the stock. Now, once you get that volume come back into the stock, that's where you're really going to see the major rally. Now, let's touch on the other two things that are important when you're talking about technical analysis, which is going to be the resistance and support levels. And this goes without saying, the resistance levels and support levels are very prominent with AMC stock. We've had support levels at about $30 for a very long time now. We have also had our support levels at about $35 for a very long time now. And now the support level that is forming itself right now is at about $40 per share. Now we have a clear resistance level at about $45 per share, but we are in this very, very tight range where the volume is going to make or break this essentially breakout or false breakout. It all comes down to the volume. Forget anything else. But the last thing that is very important is going to be the moving averages, as this does tend to be a confirmation of support and resistance levels. As you guys can see right now, the 50-day and the 100-day moving averages, and we're on the daily candlestick chart, is right here at these low wicks of these candles. So this is essentially a support level at about $39.86. Call it $40 per share. If you guys want to get too technical, you can say the cents, but it's at about $40 per share where our moving averages are and where our support level is. So this is going to be solid, and I don't see us break to the downside unless the market does get some really bad news that investors overall do not like. Now, let's circle back to this whole volume discussion. This is where the whole breakout and the difference between a false breakout really needs to be defined. And why do I think volume is going to come into the stock? I think it's pretty straightforward, but I don't think a lot of people have actually heard other people talk about this. So it comes down to the Santa Claus rally, and we're not going to go over exactly what that is. If you guys are subscribed to this channel, you know exactly what this is, but essentially there's a lot of reasons for this. Some people say it's because, companies are getting more dollars from people spending for the holidays. This typically starts around the week of Thanksgiving and lasts throughout the first 2 days of January of the next year, so January 2022. Now, the biggest thing to point out is during this time, most hedge funds, or most people that actually move money around in hedge funds and just other businesses, but for the sake of AMC and the short squeeze, we're talking about the hedge funds, they go on vacation. And what happens around this time of the year is also tax considerations. So if you're going on vacation, you got to get your books squared away ahead of time. You can't go on vacation and worry about doing your taxes when you're not able to trade for your hedge fund. Now, when you roll all of this together and you're thinking about a hedge fund throughout the year of 2021, the S&P is up over 30%. So take a hedge fund. They have a lot of winning positions. They've took a lot of profits on a lot of winning positions throughout the whole entire year. Now, they also have positions that are likely down, like AMC, if you are a short seller that sold short AMC stock. We'll just say at $20 per se, right? So they're down about 100% on their short positions. If you're going to go away for the holidays, you have to figure out what you're going to do with your AMC position beforehand. And if you have to essentially pay taxes on all of these other stocks that have made you a lot of money and you have this losing position, this is where tax loss harvesting comes into effect. You are essentially more incentivized to sell out of your losing position, take that loss and offset that loss with your gains, your short-term or long-term capital gains that you will have to pay on those stocks that you took profits on throughout the whole entire year. And considering the low volume that we are seeing right now, if short sellers, even 1 or 2% of the free float starts to be covered, you're going to see that volume increase. And since there's not that many sellers of stock, you're going to see the price really start to explode. And that is the key. If we see volume start to step up, and by volume stepping up could even be 40 or 50 million shares that trade hands, relatively low to what we've seen over the past 6 months, very low actually, you could see this breakout past $45 per share. And that is what is very important. And that's why I think we're going to actually see a real breakout, not a false breakout like we've seen when AMC did go to $53 per share. So hopefully this makes some sense, you guys. Hopefully it all does resonate with you. But on top of that, something that a lot of people are not acknowledging is even though we aren't seeing crazy high levels for calls that are out of the money for this week expiring Friday, only about 110,000 that are out of the money. in the money calls at about 7,600. What you are seeing that is very different is that the open interest is really compressed on this option chain. And what is very surprising is that the $85 strike, the call that is furthest out the money on this whole expiration date, does not have the highest amount of open interest. This is very rare, specifically for AMC. What does have the highest open interest is the $50 strike with almost 23,000 for open interest. That's about 10%, a little bit over 10% of the total open interest for this expiration. Now, in between where we are currently at about $40 per share and $50 per share, holds over 50% of the total contracts that are out of the money for this whole expiration week. So you are going to see, believe it or not, a chance to see increased buying power based off of the market makers hedging all of these contracts that could potentially go into the money. And like I said, I'll say this again, I probably said volume 100 times in this video, but with low volume on any given day, on any given trading day, these numbers of even 3 to 10,000 for open interest, that's going to make a big deal when you're talking about a 10,000 for open interest potentially controls 1 million shares. So that's the whole key. That's really what you guys need to know. As far as that, some other things that you guys also need to know is the institutional ownership is at levels that we've seen before really the second rally in June of 2021, when we did see a $370 million worth that was bought of AMC, $13 million that was sold. We seen during the last quarter Q3, $785 million worth that was bought and $33 million that was sold. So there's obviously a lot of buying power going into AMC from institutional investors. Why is this? I think they are seeing exactly what I am seeing and what I am telling you guys. We are primed for a rally. This is not a fact. It is going to happen. If it's going to start this week or next week or leading until Christmas, who knows? Anybody could tell you that or tell you their opinion on that. This is only saying the data suggests this. The data does support this. Eventually, it will happen. And I do think it will start by this week. There's a lot of people talking about the cycles of options expiring, all of that. But really what you guys need to know is in this video. It is very straightforward. Now, other than that, guys, the short interest, what we are looking at the current moment is BS estimates of 15.57% short interest and about 80 million shares that are sold short. Relative to what we have been seeing with the price action, I would say about half a percent of the free float was probably covered, and from the exchange reported short interest we got of 18.5%, that would put us at about 18% short interest. If I were to estimate days to cover, this is a running average at 2.66. That's also something to consider with the low volume and a high days to cover. That means it's hard for shorts to get out of their short positions, leading to a short squeeze. So there's a lot to be excited about, guys. We'll keep you guys updated and informed of everything you guys need to know. This is not the time to get discouraged. This is the time to be very excited. As always, these videos are not financial advice. I'm not telling you guys to buy or sell. I simply like the stock, so I am just telling you guys what I see as far as the data is concerned. So hit that like on the video, consider subscribing to the channel. As always, check out the links in the description for free stock, as well as the link for the buy and sell alerts if you guys want to be notified every time I make trades in stock options and or crypto, or you want to just ask me questions, talk one-on-one. That is up to you. Whatever you guys want to do, link down below in the description. So you guys enjoy the rest of your day. Get ready for tomorrow, but I will see you in the next video.